We've been very careful and deliberate in how we've built the portfolio, focusing on high-quality tenants, very good credit, low rents. So that puts us in a very good footing to survive more difficult financial times.
I'm here today with Bill Lenehan, CEO of Four Corners Property Trust. Four Corners recently acquired a portfolio of 12 NAPA Auto Parts properties for $21.1 million. Can you talk a bit about this transaction and any other acquisitions you may have on the horizon?
Very consistent with our stated strategy of acquiring retail assets that are net leased, initially restaurant properties, and more recently restaurants, auto service, and medical retail. Last year we bought 122 buildings for just over $250 million. Great tenant, very consistent with our strategy.
Four Corners' initial portfolio consisted of 418 Darden restaurants, representing principally Olive Garden and Longhorn Steakhouse restaurants. Darden continues to represent 59% of your rental revenue. Why is Darden such a reliable partner?
I was on the board of Darden, and we created Four Corners as a spin-off company about 7 years ago. In structuring that transaction, we had low rents, a heavily edited portfolio of assets that Darden's committed to for the long term. So, investment grade company, very conservatively run, very high restaurant volumes compared to the average property, so 50% higher AUVs versus the average casual dining property. But frankly, all of our tenants have done quite well. Predominantly restaurant portfolio, 90% restaurant. We were collecting 99.8% of our rents in July of 2020. So we got through the pandemic very well. We've been growing off of a very strong base.
Economists are currently looking at rising inflation and the potential for a recession. How is Four Corners addressing these concerns with investors this week?
We've been very careful and deliberate in how we've built the portfolio, focusing on high-quality tenants, very good credit, low rents. So that puts us in a very good footing to survive more difficult financial times. I'd also note that we priced a bond deal in December of last year at 3.1% for 10-year financing, so very attractive transaction. And we've raised more equity than we've done acquisitions the last two stated quarters. So very conservative. We were just upgraded by Fitch to BBB and upgraded to new rating from Moody's to investment grade. So that also saves some interest expense from our credit facility.
If you were giving a 30-second elevator pitch, what would you say are 3 top reasons to invest in your company?
Very high quality portfolio, very modest financial leverage, and we are both growing and conservatively managed. So very selective in the assets that we purchase, but aligned management, strong growth through acquisitions, and 1.5% organic growth. Very, very simple, top decile governance, and a very aligned team.